sir.
I'm the moderator.
Fantastic.
Why don't we go ahead and get started? And that would mean that you have to not talk anymore. So, today we are going to talk about, I'm going to let everybody introduce themselves in 1 second, but we're going to talk about, everybody has been trying to use ICOs and tokens to raise capital, and there's been a way to raise capital before they came along. So we're going to talk about the difference between raising capital using these new methodologies with crypto versus the way to raise it in full compliance with all the SEC rules. So that's basically the gist of it. I'm Gene Massey. My company's Media Shares. We're doing a live broadcast today. We do that sort of thing. We help companies find funding and market their securities offerings. And so if we can start with Steve here and go down the line and let everybody take just a couple of minutes and introduce yourself and your company and what you do, and we'll, before we get into it.
Hello, my name is Stephen Greene. I'm Executive Vice President and a Principal of NF&8 Media and Cryptotech Holdings. I am here today to participate in the panel. I was a speaker before, and I think this is a very interesting subject, given the fact that we just had a panel of attorneys who spent probably a good hour and a half agreeing that everything wasn't exactly clear, which makes this presentation even more important, because you want to comply with regulations that are not poured in cement and statutes that aren't written. So I think that this is food for thought.
Okay, thank you. My name is Dennis O'Neill. I'm the CEO of O'Neill Capital Advisors. We are a private network of institutional investors that, for qualified deals, we fund blockchain-related companies. Typically, we do between $3 million to $100 million in deal size, and our network is primarily globally. Although that we are doing some things in the United States, but we're doing them as convertible debt or convertible preferreds. I don't know exactly what vehicles you guys are thinking about alternative fundings for companies, but in the United States, I'm a part of Chicago Blockchain Association. I've spoken with Bill Foster, that is one of the congressmen that's actually on the committee deciding on what legislation to push for blockchain or crypto or utility tokens, and I spoke to Pierce Hester, the commissioner of the SEC, and the regulations for utility tokens is very, very unclear. Almost everybody that did an ICO was subpoenaed. The SEC has received over $4 billion in fines, so this is a for-profit business for them as of right now. So doing anything besides a security token offering, which is very difficult to get approved, is going to be difficult in the United States markets. What a lot of people are doing is they're domiciling offshore. They are doing Reg D offerings here, which restricts you strictly to, accredited investors, and most of those deals are being done with a convertible preferred or a convertible equity. With the right to convert into a security token at some point in time once those markets start to mature. So I'm happy to be a part of this panel, but I think that's what I have to say for now. Here, do you want to try? You want, and then he can have that one. Oh, cool. Okay.
Hi guys, my name is Borovykh. In the blockchain space, crypto space, young guys always do lots of things just to make sure, you try to do as many things as possible. So I'm involved in crypto projects and blockchain projects. When it comes down to blockchain, I'm the senior blockchain architect at Blockchain Driven. We work on a number of use cases for blockchain, actual blockchain, Hyperledger, if you guys are IBM. So we do consult government projects, corporate projects, startups, NGOs, etc. globally. Our 5 geographies are Europe, United States, obviously, Central Asia, Russia, Latin America. As part of crypto projects, we also consult some DeFi applications, such as this one, Ronin AI, for example, some algorithmic trading stuff for AI. So in our expertise and what we see, we have to sometimes help raise funds for startups, for certain projects, and yeah, we can share some experience of how this is happening globally.
Hi, my name is Danniel Truque. I run business development for the alternative assets business line at Symbiont. Symbiont is a permissioned blockchain company. So in a sense, we license our technology out to large financial players for specific decentralized applications. We have 4 business lines. One for mortgages, which is partnering with Luis Ranieri to create a mortgage servicing network, including several banks, to fix the broken mortgage servicing industry. Data management business line, which is working with Vanguard right now. They're using one of our networks to ingest data from their CRISP indices and rebalance over $1 trillion worth of assets on a daily basis. So that's a play to improve their operations. We have a fixed income and currency business line, which is working on issuing public blockchains on chain. And actually, over the next couple of weeks, we should be having a large corporate issuer in the U.S. Issuing directly on our blockchain. These first issuance, of course, it's mirrored, and then 6 months from now, the actual issuance is going to be on the blockchain. There's not going to be another bond elsewhere. And aside from that, business line is also working on FX collateral management. This along with Vanguard and Citibank. And last but not least is my team, which is alternative assets. It's essentially the catch-all. We're working on supply chain applications. We're tokenizing grain in Mexico for a company that's like doing buy-sell agreements between farmers and buyers all over Latin America. Plus, aside from that, we're also working on creating a private securities network, as well as some other applications related to collectibles and real estate fractionalization.
Thank you. Okay, I got a hard question for the panel, and you can take turns or fight over answering it, whatever you want. I was in Warsaw in 2018 watching at a blockchain conference, and this kid stands up, a young kid, he must have been 20 or something, he stands up there and he's got some drawings, and he's already gotten 20 million, he said, and he was looking for another 20 million. And I'm thinking, how did he get 20 million? And he wants another 20 million? And then cut to last year, a guy comes to my office and he says, I want you to help me sell our tokens. And so I said, okay. And we started talking about valuation and everything. He said, oh, no, we're not giving away any equity. I said, really? He said, yeah, we don't want to give away equity. We just want to get some money. And so in the world that I know very well is in stocks that are highly regulated. I mean, you can't even show a picture of cash in your offering documents, you know? I mean, it's very highly regulated. So I come from a different world, and I want to know why would, and a guy even once said to me, this is not one of them blockchain things, is it? This was an investor that we were pitching. So why would anybody want to put money into these token offerings now when you could be highly regulated and insured and under SEC scrutiny and be carefully regulated? Why would anybody be wanting to do token offerings now in this, which is not very easy to do? I think there's 2 Reg A's that have been done, right? So why would anybody want to get involved in this token business now? Who wants to take that?
Well, let me just start off with, I think you have to talk about if you're talking about doing anything in the United States or if you're doing it abroad.
No, we're talking about here in the U.S.
United States?
Yeah.
Oh, I mean, you're going to be subpoenaed. That's it. I mean,
Yeah.
that's it. I mean, it's just a matter, and then if you've raised enough money to buy your way out of, rescinding the offering or,
Or
possibly going to jail.
Buy a fake passport or
Yeah,
something.
no, I mean, obviously, all the deals, the vast majority, I shouldn't say all the deals, the vast majority of the deals were subpoenaed. Billions of dollars in fines were paid. There is, based on my conversation with Bill Foster and Pierce Hester, there is no clarity to the regulatory market right now. So, although that they're hopeful that everything's going to start off with everything goes through a regulator. And that's their solution. Bitcoin transactions, every single transaction, it all goes through a regular third-party regulator or board of judges or whatever that they decided that they're going to call that. And then if you hit these certain milestones, that you can be unhinged from that, and after 3 years. So in this market today, I think that's it's a great long question, but at the end of the day, it's if you raise money in this environment, in this market, doing a utility token, you are asking for trouble. And not only that, but you have to understand.
I'm talking about as a security.
As a security token offering?
As a Reg D security token.
Yeah, no, the Reg D offerings have not, I haven't heard of a single subpoena. Maybe there's been a handful of them, but I haven't heard too many of them. And basically, if it's going to be a security token offering, typically you're going to either own equity, you get some type of dividend, or you have shareholder rights or a combination thereof. But those have all been fine. The problem with that is that you're limited to accredited investors. The SEC is talking about broadening the definition of accredited investor, which could be possibly, unleash a tremendous amount of capital into this market. But as of today, I think that, if you do a Reg D offering, you should be fine. What a lot of the companies are doing, as I said before, is that they, you set up in Bermuda, the Caymans, Switzerland, or one of the other, havens for these types of transactions, and then you do a Reg D here, and then it kind of gives you another layer of room between you and the SEC.
Yeah.
That's all I got.
Any other comments?
I would say overall, 100% agree.
Okay.
Especially since it's a public speech, I should agree. So, but long story short, when it comes down to security versus utility tokens or coins, it's been the case that it's much, much better to just do a utility token. And when it comes down to security tokens, most investors start realizing, whether it's retail investors or institutional investors, they start realizing that it's much better just to buy crypto outright, as opposed to give somebody a potential access to a security token. So security tokens overall, I think, kind of disappear in this moment. So the question was specific about security tokens. Why would anybody do this?
If I'm raising capital, why would
you go
put the
this route?
token on an exchange instead of selling shares?
As a founder of a company?
Right.
Because you have nothing better going for you. You have no connections and you have hopes. That's the only reason. Seriously.
When you say no connections, what do you
No connections to investors, no connections to the investment community, to
When you
VCs,
sell
et cetera.
tokens.
That's why you go and sell tokens, because you're still inspired by what happened back in 2017.
So who gets all the AML and KYC information?
Again, the question
just
was
exchange.
The question was specifically designed for the U.S. market,
Yes.
for the verified, but
Right.
internationally, there's still hope that internationally can bring so much more money, which is actually the case. You're talking about specific geographies, mostly Asia. It's mostly South Korea, China, Japan.
So if I
that's
post
the
a token, the reason I would post a token offering is because there's so much more capital that could possibly be invested worldwide.
In theory,
In theory.
yes.
Yeah, and the other aspect of this too is that if you're talking about a security token, it's not a utility token. You get a percentage of the company. You get something
yes.
for that.
yes.
It's just not like, I'm going to sell
And
tokens.
who regulates that?
The SEC.
Is that still regulated
Well,
the
the
same
one thing
way?
about it is that if you register your security token offering offshore, let's say Malta, Switzerland, Bermuda, Caymans, or whatever, you get approved by Estonia. You get approved by that local jurisdiction, and then that gives you a certain level of protection. And then you go ahead and you hire attorneys, and then you do the do the Reg D offering here. The idea here is that the only difference between doing a publicly traded company stock and a security token is that in a public stock, you call a broker that goes through his brokerage firm, that goes through a market maker, that goes through a clearinghouse that goes through DTC, that goes through a transfer agent, and then settles in 3 days. In a security token transaction, it happens immediately. All those middlemen are smashed. So, and it makes it faster, cheaper, safer, and all the things that you like about a transaction.
What does it cost to list on an exchange?
Well, it all depends on what kind of deal you have and what type of relationship you have with the exchange.
Well, let's say Stephen here.
Let me just go through this. This is the rub in the deal. The rub in the deal is that there's not that much liquidity for the security token offerings. Right. So the problem is that you get all these great things, but at the end of the day, without liquidity, you're basically trading by appointment. So
yeah, but with private stock, you got the same issue. So.
Yeah, well, in the private stock, you're completely stuck. Pretty much, I shouldn't say that. I guess there's second, you can do it. But I mean, the idea here at some point in time that we're going to see is that we're starting to see institutional quality exchanges pop up. And the major issue with the institutions, which were
those are ATSs.
Yeah, well, basically what they are is, there's different labels for different companies, but these have been the rubs in the deal. Number one, institutions only want to do what they historically have done before. So it's got to look, feel, everything's got to be the same. They're not changing. You got to change for them to do business with you. Right. So first, the custodian issue. It's got to be insured. Second is that they have to have access to it almost immediately. Right now it's 10 minutes to, hours. Hours to get access to your capital. 3 is that you have to have the best bids and offers. And, this is one of the markets that is very, very hot right now is institutional quality exchanges because the biggest...
You're talking about crypto exchanges.
Yeah, well, crypto or security token offering exchanges.
Right.
On both sides of it. Right. And then the other side is that the big drag has also been the regulatory issues. So, but at least that if you could bypass the United States, you'd still have much of the world to be able to focus on, and but even with the U.S. I think will hopefully give some type of real clarity at some point in time. But I think that's all. I've talking enough.
Yeah, so I just want to clarify because I think we're mixing a lot of concepts here. First of all, ICO, that's not a security token. That's an illegal offering in the U.S. We have very clear laws since the 1930s. No, I'm just rolling those out because we also have IEO, which is the initial exchange offering, which is just an ICO that you buy through an exchange. That's still the same garbage that it's illegal in the U.S. Mm-hmm. Then you have security tokens. A security token, it's a regular equity offering, only that the underlying technology is blockchain. That's it. It shouldn't be any different than any other private placement that you do. Mm-hmm. The only difference is the technology, and the technology allows for automatic capital table tracking. It allows for payments directly on the blockchain. It allows for example, direct communication with investors. There are many private companies that at some point they need to do a capital raise, and they have no idea who owns them. They cannot track the ultimate beneficiary owner. That is just crazy. So the advantage of security tokens is the underlying technology and what it can do for you. Mm-hmm. In terms of the exchanges where this is listed, really, at this point, there's no large or reputable security token exchange. There's a lot of crypto exchanges that some of them may list security tokens, but we're talking about a Reg D security token. That is just a standard equity offering. Mm-hmm. It just changes the underlying regulation.
Okay, now
I just want to add one more thing. There are a multitude of countries abroad that have total clarity on regulation. So many. Europe.
You don't have to do it here.
Yeah,
you can.
There's
plenty of places where they have where they're regulated.
Yeah,
right?
yeah. To where that you can do business without to worry about. Being subpoenaed or
sure.
Making a misstep because there's lack of clarity.
Okay, now Stephen here is
just a quick thing, because another thing to clarify: if you do a security token offering, a Reg D, which is a private placement, you don't need a transfer agent, you don't need a custodian. The blockchain actually fulfills those functions, but you like the custodian and the transfer agent are something that you need in public offerings. I'm happy to be corrected by a lawyer if I'm off, but in general, you don't need a custodian or transfer agent for private offerings. So that's another advantage of doing an STO as opposed to a regular.
Okay, now Stephen's raising capital. Mm-hmm. 15 million you're raising right now. So give him a microphone. I got a question for you. How is it going to be easier for him to raise the funding with a token offering?
I have an answer before the question.
Okay.
an hour and a half of attorneys and this discussion, why would any company like ours that's successful, private, and wants to grow, dip our toe into this market at this time? I think the potential is unlimited and fabulous, and we're actually in the business. But why would we do that? Because all it means is problems, trouble, regulation, a target on our back. So we don't. That's why we don't. And we have a different methodology. I won't go into that.
But you're
right
even
now.
in the mining business.
I know, but that's irrelevant.
But you still wouldn't get
We're in
involved
the
in this?
growing business, okay? And the way we want to grow is the healthiest, most efficient, easiest, and we think most creative.
Okay, but they're saying it's easier to do it.
Believe me. We would not choose at this time to get involved in a lot of very unclear regulations.
Well, now, Reg D
Market-
is clear.
marketplaces
security, right?
overseas that may not.
Forget overseas, we're talking about here in the U.S.
And also a market here that is fraught with danger. Now, I'm not talking about IPOs or other things like that, which we don't do either. But I'm just talking this whole undeveloped Wild West territory is fabulous. It's fantastic. And I think it's one where a lot of people are going to be successful, and a lot of pioneers are going to take a lot of arrows, and it's going to be fraught with danger.
Now,
so we would choose a different
Peter
methodology.
doesn't think this is a Wild West, do you, Peter?
Yeah, I mean,
What do you
Totally
think?
Wild West. That's amazing. I sure no,
Okay.
guys. It's a new territory.
I mean, do you agree with what Stephen's
from
saying?
a high-level perspective, there's a meat on the table for the banks and financial institutions, and there's
There's a
somebody else who wants to take the meat. So it's great. It's amazing. So lots of people will be put to jail because lots of laws in the SEC are being lobbied by the banks. I mean, this whole thing. So it's amazing. I mean, I can't say that's not that's a growing market. So it's a new revolution, disruption of how the system has been, before and how it's going to be now, like in the future. Hopefully, it's going to be more digital. But in the new digital revolution, I mean, we say, everybody on the stage say here, because we work with clients, right? We say that, well, it's likely that it will be a little bit more fair than what it is now. But it's not necessarily true. Because even right now, if you look at the ownership of digital assets, I mean, unfortunately, the large percentage of the ownership is, in very, very few hands of those people who were lucky or fast or rich enough to get in. So it's definitely a Wild West. That's great. I totally understand that this is great because the market is growing. There's lots of potential.
So what should we do? Should we come back in a couple of years or what?
Come in a couple of years, you'll miss the whole rally. That's the whole point. You cannot.
I want to strongly hold on. I mean, the ICOs were, the wild, wild west. I mean, once you're talking about a registered security token offering, you're talking about having it written, approved by a regulatory body. When you have a Reg D, you're talking about having a law firm sign off on it. Mm-hmm. The real issue is this: if you want to attract real money, you have to be a real deal. And the real deals look exactly like this. You have to have a quality management team with a track record of success within the sector of market that you're actually in. Number two is that you actually have to be, for real money, not the startup money, but they want to see that the project, product, or service is actually done, or that you're actually getting some traction into the market. Third is that they want to see that you're in vibrant markets. That you are either significantly.
But that's not how they're positioning themselves.
Well, no, but the whole idea. But you have to understand this.
Blockchain.
This is the problem. When you have none of that, and also you want to provide zero due diligence. Now you're in the wild, wild west. Real players that attract institutional quality. Institutional capital, they pass that vetting test. Everybody else that can't pass that vetting test tries to do something else, which means that.
Go to Malta, right?
Well, no, but at the end of the day, you actually are giving due diligence that is signed off by a law firm,
sure,
opposed to just raising money. If you can't pass those hurdles, then you try to figure out something else.
Yeah, exactly.
I have a question. I wonder if in those cases, a lot of companies wouldn't.
Get a mic.
I said, I wonder if in that case, a lot of companies wouldn't try the traditional existing route because they fit all those parameters.
Correct.
As you said, they have the quality management, and you go right.
And their relationships.
And
That's the most important.
So now you're saying, well, we're going to go into the STO market, and I'm not saying you shouldn't, but there's a real, I think, a board or a group of entrepreneurs would say, well, gee, we have the quality management, we have X, Y, Z, we check all the box. There's a traditional way to do this. We don't have to jump over to that. So I think that there's that
Well,
also.
you're definitely onto something. But I mean, but basically, what ends up happening is that the catalyst is that if the system's already working, why change it? And it is. I mean, if you look at the public markets, and if you look at the private markets, venture capital, private equity, they're vibrant right now. So I think
There's a machine already rolling.
I mean, but believe me, when that machine starts going off the tracks, everybody will be on this track because this is the better, smarter, cheaper way to do business. The idea now is that we're starting to see the capitulation slowly but surely. I mean, if you listen to Michael Turpin or Dara, I mean, you start to see the trends are in this market. Money is being raised, significant money is being raised in the U.S. and globally for these markets.
Yeah.
So, it's a blockchain conference. It's
How much money is being raised relative to traditional
I would say it's pretty. I mean, but I don't know the latest numbers.
overall?
Yeah.
But it's not even
Well,
close
what
to
year
be
do you want to
mentioned.
talk about? I mean, if you're talking about
This year.
1917, ICOs outraised the venture capital.
Listen, I think what we're saying, I think what you guys are saying is, there's a time to join the revolution. If you join it at the wrong time, you wind up hung. If you join it at the right time, you wind up
That's the
president.
message for everybody here.
It's
Join
like,
the revolution
it's like
today.
surfing. You catch the if you're too early, there's no wave. If you're too late, the wave's gone.
But also, again, I think we're still confusing the idea of like a company just raising an ICO versus an STO.
Yes.
If you don't fulfill all the hurdles, it doesn't matter if you do an STO or a traditional paper offering, you won't raise capital.
That's
Yeah.
true. That's
If you're a bad company and the only way of raising capital is by doing an ICO, then I mean the investors that invest in that, it's their fault. It's only the technology. Like over the next year or so, our cell phones are going to change from 4G to 5G. Nobody's going to care. We're just going to still make phone calls, and the technology behind it change. Same idea, whether you're doing a paper offering or an STO, nothing should change from the investor perspective. It just happens to be that perhaps your payments are going to be more effective. The company is going to know who is the cap table at any given point in time. Any transfer restrictions will be automatically enforced on chain. So it's going to be slightly better, just like 5G is going to be better, but it's not going to unleash new
Let me
liquidity.
ask you a technical question, because I want to know about the audience wants to know about the technology.
Sure.
So I'm going to post my token somewhere. Or I'm going to sell some stock under Reg D. Let's assume they're both compliant, both got a big fancy attorney, everything's the same, and my friend says, no, you should do a token, and my other friend says, no, you should sell stock and just stick with a regular company. So if I want to do a token, how much is it going to cost? Where do I get a token? What do I do? Do I hire a software guy like you to make the token? And where am I going to put it? And how much is it going to cost to put there? And so just run me through an example of that.
All right. So right now out there's a lot of what we call STO providers. So I mean the usual suspects are Security, Securitize, Corconex, Tokeny, Tokenize. All these guys, they create tokens. Some of them post to Ethereum. Others are going into Tezos or EOS. I'm against
much?
public. I'm
How
against.
much?
Huh?
How much?
Depends.
Oh, yeah. I mean, those guys anywhere from like 10,000 to 50,000.
10 to 50,000.
So really, you're
they
paying.
make a token and then it's ready to go somewhere, and then I want to put it somewhere.
Well, that's the problem. That
What
they're
does that
charging.
cost?
They're charging that to create the token, and then from the issuer perspective, it gives you the facility of the benefits that I mentioned of always knowing who's your cap table, et cetera, and all these things. My biggest concern there is that they're posting to a public blockchain, which has a lot of concerns. I'm more on the permission blockchain side, where you post to a network of known parties. And then within that ecosystem of known parties, you may have an ATS, you could have a marketplace, and then you can trade within that. You can have banks and you can have stable coins within that system, as opposed to going into Ethereum and then finding that there's a fork and now your security just split in two versions of your security.
Okay, let's keep it simple for some maybe people that are watching on the internet that don't know everything.
Yeah.
So I got myself a token. Let's say I paid only $10,000 for it, okay? They made this token for me, whatever that is. Is it that big? Is this big? So they made a token for me. That's got to be posted somewhere so somebody can buy it. So where would I post it and how much will that cost?
So a company from one of the VCs that invested in Symbiont is called T0. They actually, they're a marketplace for
I know
these type of
T0,
tokens.
Yeah. How much will they? I thought they're like $100,000 a post on their.
I don't know their listing fees. I'm not familiar with
Do
that.
you know any
and also
listing fees, or-
their liquidity is not that big compared to traditional venues as well.
Yeah. Peter, do you know what it would cost to list on an exchange somewhere, or Dennis?
Depends. It all depends. So, and the whole process also depends. So,
So I got my token. I want to put it somewhere.
well, before you get a
Somebody buy it.
token, right? So everybody wants to get a token, but they don't know what is going on. So
Yeah.
aside from the legal side, you also need to find the technical side. When it comes down to the technical side, we typically, for example, we do the so-called DDRMs. We do the studies first to identify what these tokens will do. The price of $10,000 to $50,000 is also not very accurate. It all depends. Depends on how many smart contracts will be pretty much involved in this whole process, especially if you do this through some public permissions
It could be
blockchain.
$100,000, right?
Could be $100,000 easily because you might have some admin smart contracts, you might have some additional functionalities. It really depends.
Sure.
The goal of private permissioned versus public permissionless, I do understand the goal to sell Symbiont on this panel, but with all due respect, public permissionless.
There's Fabric, there's Scora, there's plenty of permission blockchains
they're
out
not
there.
blockchains.
They're
not blockchains.
Well, I got
They're
this token. I'm
just
anxious to
technology.
post it
That's a different
somewhere.
story.
Where can I put it?
and Hyperledger either not. But the true blockchains are public permissionless blockchains, such as Ethereum, for example.
Actually, public blockchains are a generalized case of permission blockchains, if you think about it.
Sure. We can get into this philosophical nature, but right. So, but overall,
I
there are
just want to know
some.
where I can put my token.
There are some. We'll get to this. We'll get to this. So there are some public permissionless blockchains that do offer smart contract functionalities, such as mentioned, Ethereum, Waves, EOS, etc. So once you publish it there, the question is how much will it cost to get published? You can publish it for the price of the development. That's it. It's published.
Yeah.
The different question is how to market it. All right. So
Can I
the
put it on
marketing
my own
costs-
website and market it that way?
You could absolutely do. Nobody will find out about your website. Nobody will find out about your offering, and you will not be able to attract accredited investors.
So the
especially
exchange that you posted on, you
is
need a
supposed to
heck
be
of
the
a lot
marketing.
of traffic,
Correct.
right?
That's the
Okay.
proposition. So the proposition, if you do not have
And
access
that's
to
why
investors,
it costs $1 million on some exchanges.
easily from anywhere from 50,000 to $1 million. Yeah.
50,000 to 10 million
To
to
2
post
million,
it on
yeah.
an exchange. Okay, that's what I wanted to
Hold on.
hear.
I mean, I think that you have to understand that there's security token exchanges, and the idea here is that, when the exchange has all the volume, they have all the leverage. When they have no volume, they have no leverage. So
Sure.
I don't know where these guys are coming up with 50,000 to 2 million I mean, maybe to go on Binance to do a token or to do a cryptocurrency or something like that, or utility token, yeah, those fees could be 50 grand
Now,
to 2 million.
mine's a piece of equity.
Yeah, but security token, they need you if you're a quality project more than you need them. So I
So
mean,
it's free?
I mean, for the relationships I have, it's cheap to free.
Yeah?
But if you're a crap deal, then they're going to make you pay up because they don't really. You're not bringing a lot of value to their exchange. But if they need a quality deal on their exchange. They're willing to be very, very reasonable and very flexible
I
because
just tokenized the Plaza Hotel. Okay, so
free. In fact, we'll pay you because it'll bring a lot of publicity.
And going back to this Wild West thing, right? So now we are at the forefront. So it takes the extra legal, extra tech, extra architectural, extra risks down the road, as opposed to just do stock. What a typical project would do if it has relationships. Go do stock, go do private placement.
Stay away from blockchain is what he's saying.
I'm saying I'm a big proponent of blockchain. So those first movers who pretty much think that they could revolutionize the world, they have to have this in place because they need to understand all the risks. It's not going to be a fair comparison of a typical stock offering versus, say, some kind of STO.
Well, the whole world is going to tokenization. All these assets are going to be tokenized. They're all going to be listed on exchanges. And believe me, everybody's saying this is the revolutionary, we're the pioneers, and you're going to be face down with 3 arrows in your back. That's not the case. It's moving. The needle is moving in the right direction, and the drums are pounding louder and faster. So for the people that wait, you're going to be, you may not be able to position yourself as well. But as of right now, the market is moving forward. The major players are moving forward, and anybody who, if you do any research into this market, you see all the major players, all the major institutions are increasing their allocations to this market. I mean, everybody is trying to figure out how they transition from legacy systems into blockchain, type systems for just strictly blockchain, not investment side. So, I mean, it's definitely happening.
Okay,
it's just a matter of
we've
when you get on
sufficiently
board.
heated up the room that we have a question back here now. And by the way, gentlemen, if you answer a question, would you repeat the question, because the camera cannot hear those questions? Just repeat the question. What's your question?
I believe it's Dennis who made the last.
Dennis,
Yeah.
yes.
No, who's the?
Yeah.
This is Dennis?
Yeah, I'm Dennis O'Neill.
I heard what you just said, and from your mouth to God's ears, I'd love for you to be right,
Okay.
but I'd love to also see some
Evidence.
some evidence.
Did you see Dara Albright's presentation earlier today? Did you see that presentation earlier today?
I did, but
Okay, I just wanted to.
Dara's got the evidence, no doubt about it.
having a data on what, I mean, as I think it was Peter pointed out, there are some differences, but for right now, from an issuer, it makes absolutely no sense. I mean, yes,
Ooh, no sense at all.
it's much more expensive for very tangential benefits. I mean, people are putting money into increasing diversity, but I don't think that's changing the world either. I mean, the fact that people are putting money into this, and I think this technology is amazing, and things will revolutionize finance. I don't think we're one step away from that.
Okay, let's stick to questions.
The question
We
is,
can answer here.
the question is, are we,
Where's the evidence?
where's the evidence? So, all of these gentlemen on this panel are actually pro-blockchain. We all are pro-blockchain. We are incentivized to be pro-blockchain
Well, I
because
don't
of,
know.
except for the moderator. The moderator probably does not, sold
I'm
BTC.
being the bad guy because that's a good way to get the questions going.
But pretty much, what about the evidence, right? So the reason why I'm so critical about everything here is just because can be curious on this one, because we just, we don't like to bullshit anybody, right? It's like, it is what it is right now. However, those few corporate clients, government clients, startups, NGOs who take the risk, they know it's risky, but if they take the risk, there's a potential. How many investment banks are there right now? Lots. How many do you guys know? Like, obviously, if you guys in the industry know everybody, right? But, outside the industry, 5, maybe 3. Right, so every single industry at the end of the day has very, very few leaders. What about software? Very few leaders, right? So the question is, should you wait? If you wait, you will definitely not be able to. Like, it's going to be
The wave will be
every
gone,
single year.
right?
It's 10 times
The
harder to
surfing wave
do
will
now.
be gone, right?
Absolutely, 100%. Yes. So it's definitely more risk. It probably doesn't make much more sense for certain projects to be on this right now. However, for those that overall in the future. Correct. With the timing, with that interest.
Okay. So let's say I
Well,
love this. I want to get involved. What should I do?
Well, no, I mean, I just want to make one other point here. Is that,
I want to surf. Where do I surf?
Templeton, all these funds are tokenizing. They're tokenizing these assets. Now you're talking about institutional investors have about 20% of them own some type of digital asset. You're starting to see the needle, and then you're sitting there with both hands over your eyes going, I don't see it. There's nothing here. I mean, if you compare it to the $1 trillion in the regular market, yeah, I mean, it looks small. But if you look at the growth of month over month, year over year, what's going into this market, it's the hockey stick is happening. I mean, the whole idea is that it's just a matter of.
I'd love to see the data of this. Over the last 3 years, have you seen, leave out security code, just talking about digitizing assets, have you seen a marked increase in actual hard assets digitized and put on a blockchain over the last 3 years?
Yeah, no, I mean, over the last 3 years, it's probably primarily over the past 12 months. I mean, that's where the market is. Templeton, digitized.
And next month it's going to triple.
Yeah, for sure. There's no doubt. That is an absolute fact. I mean, it's.
Now, let's assume it doesn't triple. Let's assume it just stays as is. Then you lose nothing. But if it triples, you gain everything. So the risk reward is pretty asymmetric at this moment. I mean, what are the costs to try? Very low, especially for big corps. Extremely tiny relative to how much they pay to to the execs. It's like unbelievably tiny.
So,
because
Stephen-
everybody's pricing their offerings, everybody's pricing their services so low this moment. The fact that a coin could be listed for whatever, like the prices we mentioned, anywhere from say 10 to 100,000. I mean, even that price.
Well, let's
lots
see,
of companies
let's see
working
if
on
we
cost.
convince Stephen to do it.
Yeah, I'm ready to take a hard look at the right time, no question
Sure.
about it. And the point is, you can see, not for this audience, but all those folks out there, you can see the tremendous disconnect between the democratization of micro investing and micro ownership and participations and the tokenization of everything. And how do I do that? How do I get involved? And how many people are losing money because they don't understand where they belong in this whole new system. They don't understand their place, whether they're an individual or a company. They can't place themselves because it is very, very detailed, very confusing. There's a tremendous amount of expertise here and other places, and people can get very, very lost. So, and I don't want to be one.
I mean, the one thing I will say, the institutions
question.
are going to lead the charge.
Yeah,
I mean, that's going. I mean, by the time that
Institutions will have to lead it, of course.
Johnny Lunchbucket is going to be,
Right.
investing in your security token offerings probably 10 years away.
Got a question here.
But the real money is going to be
Let me
showing
take this
up.
question over here. Go ahead.
So a lot of you guys are discussing sort of the compliance of legal issues, but I used to work for PIMCO, and it's a very conservative company, but one of the discussions we would have is like, we could be pro-blockchain, but I have concerns about the technology and the fact that there's so many exploits. I mean, like, if you try to dissect the BXE 51% attack or the hacking of Binance, this stuff is super complex than what we've ever seen. And that ceteris paribus, if you have a choice as a company to go with traditional equities or to do a Reg D with security tokens, I would definitely advise the private equities just because we know more about that and there's a lot of unknowns. And the second thing is that another complaint is that if something does go wrong or something is hacked, you really can't sue or litigate against anyone.
Okay, so the question is, what are we going to do about the hacking? And you guys want to address
jump
that? He's
in.
got a very huge point. I mean, I see every
Really
day I
fast.
read about somebody lost $300 million or something. So what are you going to do about all this? Is these deals insured? Just
mean-
like
Some exchanges are.
Let me get to
Yeah.
the point about, first of all, about whether to do traditional stock offering versus blockchain. So capital markets in the US, very developed. UK, very developed. Parts of Asia, very developed. Everywhere else, they don't exist. They literally don't exist. You have 10 stocks, 10 companies that are pretty much owned by the government, directly or indirectly, and there's no way to raise funds unless you do some political deals, right, on some very, very high level. For them, that's a perfect solution to develop that capital market system because it takes a lot of years and expertise to develop. So when it comes down to the U.S. market, that's one of the reasons why the developments are lagging behind because for the most part, any developments, like any politics, have been driven by economics. So either alternative ways currently in the U.S. to raise funds, they don't care about developing this technology further. That's why, in partially, it's a little bit difficult with the regulatory environment here.
what about the hacking? That's what I want to know about.
So, well, the hacking aspect's actually like, that's just like the poster child for why doing permission blockchains as opposed to public blockchains. In public blockchains, when things happen and they go wrong, there's not much you can do. Public blockchains are also subject to 51% attack and other things. And of course, there's some blockchains like Tesla's that they have like their governance hybrid, etc. And there's some things to mitigate. But in a permission blockchain, that's not an issue. All the parties are known. If something goes wrong, we're all adults. We sit around the table and say, okay, we need to undo this one. And that's it. And you just change it. And on the blockchain, you're not erasing it. You're pending. And there's going to be a record that the committee decided to undo this transaction because something was off or there was an error in the contract. So it's not a big deal if you're in a permission blockchain.
In the permissionless blockchains, the network could be hacked overall through some kind of exploit, but there's a beautiful word called fork where this hack is covered. And how many people hacked Bitcoin? Zero.
No, and actually that's another good point. Like, for example, you mentioned the hacks on the exchanges and all that. Blockchains themselves, the cryptography has not been
They
hacked.
hacked addresses and wallets. That's
it's
one.
usually
Second-
at the middleware level.
Second, for the most part, exchanges are hacked with the internal hacks.
Yeah.
purely. Like it's not the blockchain that is hacked.
And a lot of these new exchanges that are coming on board are actually insured now. So, I mean, it's very hard for us to get an institutional investor to invest.
Technologically, it's pretty safe.
If it's not insured,
pretty safe.
institutions won't touch it, will they?
The insured ones are, yeah.
Okay. Okay. Yes, sir.
I just wanted to make a quick comment on this because I think the hacking is a misconception to a certain extent. Like Peter said, a lot of the hacks or failures that have happened are due to human failure,
Yeah.
process failure, not technological failure.
And the process failure, so the gentleman said that the most hacks are human. Absolutely. So the fact that current businesses in blockchain just lack in pure business savviness of how to organize systems, that's the failure of the business
It's people.
side, not the
People
technology
screwing
side.
up, not the technology.
But
Paul?
the systems could be built with the proper incentives to evaporate those
Sure.
situations, minimize them.
Yeah,
Paul, you
but
got a question,
even
Paul?
even if the people are gonna be like the weakest link where it gets hacked, the problem with public blockchains is that you cannot undo the damage. Somebody lost 300 million in Ether, and then that's it. Unless you're in one of these DeFi
You cannot do the
exchanges
damage
that actually have
by
a
doing
master
a
key, in
fork.
which case they're not decentralized at all. If somebody holds a master key, and then you got to worry about who's holding that master key and how it's secured. So there's like bigger issues. That does not happen in permission.
Okay, let me get.
I want to add one thing. I mean, one of the biggest reasons why that I moved into the blockchain and the STO markets were strictly because of this. Now, when you finance an early stage company and you take them public, if you're not, you are immediately exposed to illegal naked shorts that publish nonstop lies, insults, and slanders about your
You
company.
mean when stocks?
I mean, yeah, stop public stocks as they sell tens of millions of shares naked short.
Oh, yeah.
And then they pay DTC an extra fee, and they cover the short for them.
Yeah.
So the whole idea is that try to go to the public markets as an early stage company, and the first 2 pages of your search results are lies, insults about your company,
Right.
and try to get some people interested in investing in you.
I'm hip.
So the whole idea is that
You can't short a token?
I mean, you can't. Exactly.
can't short a token.
Exactly, and that's the whole idea is that for the early stage guys to get a fair shake in this world, this is the reason why security token offerings are one of the best ways to be able to do it. I mean,
That's a huge advantage.
Yeah, for
to
sure.
be not shorted.
But
Now,
that's-
Paul's got a question. Well,
But
hang on
actually,
a second.
that's a technological limitation of exchanges right now. You should be able to short tokens. That's not
Okay.
that's a separate issue.
well,
Okay.
it's illegal shorting and then illegal shorting where you just print nonstop shares.
Yeah,
I mean,
but
and
they're-
the
that's just
SEC doesn't
illegal.
do anything about it. DTC covers for it, and FINRA is basically it sits on their
Okay.
hands.
But the underlying
One
technology
last
is going to
question
change it. That's
here. We're
regulation.
getting
We have time for one more question.
one more question. Paul's
Make it a
got a
good one.
question. Go ahead, Paul. Go ahead.
I had a question about the hacking.
Oh, okay. All right, one last question. Anybody got a really good one? Juicy one?
Use the ball up.
I think that's it then, Sydney.
I got a question.
Okay.
You were talking about some of the actually people in the market, they go and buy from this exchange and sell it and short this exchange. That's what the SEC has a problem, that they buy from here, that they are day traders and sell it there.
No. But basically, what they do is that they use a market-making status. Market makers can legally short unlimited amounts of shares, and then basically what they do is they move these shorts offshore, and then they pay DTC a fee to cover for it. And basically, this is the business. This is the criminal business of illegal naked short selling. And if you show up to the SEC with a mountain of evidence proving beyond a shadow of a doubt that you've got a massive naked short and you can play loud enough, they immediately investigate the company for months and do nothing to the short seller. So, tell me about how great these public markets are for small stocks. I mean, basically you got, they're clubbing you in the head, and then when you try to fight back, the SEC steps on your throat.
That's illegal pumping and dumping.
What they call everything's illegal pumping. An illegal short can publish lies, insults, slanders nonstop. They can do it without an author on Seeking Alpha. And then basically what they do, there's none of them ever get prosecuted by the SEC in any way, shape, or form. And if you complain loud enough to the SEC, they will add insult to injury by investigating your company nonstop for the next 6 months, which basically puts you in, you're paralyzed.
Can I pump and dump my
And through
token?
blockchain, just more transparent. Pump and dumps right now on the exchange also exist, unfortunately, crypto exchanges,
Really?
because, well,
So how do
they
I do
exist like
that?
every day.
And
That's what the biggest SEC problem.
That's the problem right now, that the exchanges
SEC
right
wants to
now,
know how they're going to prevent pumping and dumping with
very
tokens,
difficult
right?
because there's no exchange and market makers at the same entity right now. That's a huge problem preventing the revolution, but it's going to be resolved through decentralized exchanges.
So I can still pump and dump my token, huh?
Revolution to the studio.
Okay.
Decentralized exchanges are the problem.
I think we have to end, my daddy always said,
Decentralized
leave a
solution.
party while you're still having a good time.
There you
So,
go. Before you had one too many.
Thank you very much for the opportunity to be with you today.
Appreciate it. That's great.
Glad to hear it.
Great, guys.
Thank you, Paolo.